Welcome! Today, we're diving into something that feels, let's be honest, super complicated for most people. Investing. But what if I told you there's an evidence-based strategy that's so simple, yet so powerful, it might be the only one you ever need? Let's get into it.
Does the world of finance just feel completely overwhelming sometimes? You're hearing about stock picking, crypto, market timing, all these different acronyms. It really feels like a full-time job just trying to keep up. And that stress of making the wrong move, it can be paralyzing. For so many people, that complexity is the single biggest reason they never even get started.
But what if we could just turn down all that noise? What if there was a way to get all the market's growth without all the complexity? I mean, imagine flipping a switch on your financial life to easy mode. Well, that's pretty much what we're talking about today.
So what is this magic button? Well, it's called the 3-Fund Portfolio, and the name really says it all. It's a strategy built on 3 simple pillars: simplicity, massive diversification, and keeping your costs incredibly low. It's so straightforward that people actually call it a lazy portfolio, and that's a good thing. It means you can set it up and get back to actually living your life.
And seriously, this is it. This is the whole shebang. Just 3 funds. One that buys you the entire US stock market, another that buys you the entire international stock market, and a third one for the bond market. That's the whole recipe. No tricky formulas, no trying to pick the next hot stock, just these 3 simple building blocks.
Okay, I know what you're thinking. If it's that simple, can it really be any good? And that's the beautiful part, right? Its incredible power comes directly from its simplicity. So let's look at the actual evidence that shows why this lazy approach works so darn well over the long run. On one side, you've got the traditional way, active investing. This is where a fund manager is trying to be a genius, picking and choosing stocks to beat the market. It's complex, it's a ton of work, and this is key, it comes with some pretty high fees. But on the other side, you have our 3-fund portfolio. It doesn't try to beat the market. Its goal is to simply be the market by owning a little piece of everything. The whole philosophy is different. Are you trying to outsmart millions of people, or are you just trying to own the whole pie?
And look, the data on this is it's crystal clear. Over long periods, like 15 years, something like 90% of those highly paid active fund managers fail to beat a simple index. Why? Well, it often comes down to one thing. Their high fees just eat away at your returns. A simple, low-cost portfolio like this consistently comes out ahead because you're not paying someone to guess, you're just capturing the growth of the entire global economy.
All right, so we get why this works. Now let's break down the how. What's actually inside each of these 3 funds? What job is each one doing for you? Let's pop the hood and take a closer look at each ingredient.
First up, you've got your total US stock market fund. Seriously, think of this as the V8 engine of your portfolio. When you own this single fund, you're buying a tiny slice of thousands of American companies, from the biggest tech giants you see every day, all the way down to the smallest startups. This is your main driver for long-term growth.
But hey, the US isn't the only game in town, right? That's where ingredient number 2 comes in, the Total International Stock Market Fund. This gives you a piece of thousands of companies outside the US, all across Europe, Asia, and other growing markets. This is absolutely crucial for diversification. It makes sure you don't have all your eggs in one country's basket.
And finally, we have our third ingredient, the Total Bond Market Fund. If stocks are that powerful engine, then bonds are your high-tech suspension system. They're the shock absorbers. They're generally way more stable than stocks, so when the stock market gets choppy or takes a dive, the bond part of your portfolio acts like a cushion, smoothing out the ride and making those bumps a lot less scary.
So let's just recap the magic here. Why does this work so well? 1, it's simple, which means you can actually understand it and you're way more likely to stick with it. 2, it's incredibly diversified, protecting you from any single company or even a single country's economy going sour. 3, it's super low cost, so your money stays in your pocket, working for you. And 4, as we've seen, it's a proven, evidence-based strategy for success.
There's a famous quote that just perfectly sums up this entire idea. It goes, "Don't look for the needle in the haystack, just buy the haystack." Instead of spending all your energy trying to find that one winning company, the needle, this strategy says, you know what? Just own all of them. Just buy the whole haystack.
And that really brings us to the final thought here. In a world that is constantly screaming at us that we need more complexity, more trading, more secrets to get rich, maybe the most powerful and even radical thing you can do is just embrace simplicity. So I'll just leave you with this one question to chew on. Could your most powerful investment strategy also be the simplest one?